just finished up your insurance policy period and the insurance company sends you a bill and says you owe us $10,000. Welcome to what is called being audited. Hey, if you've suffered through an insurance audit or found that you got slapped with an unexpected bill to pay, stay tuned. In this video, I want to share with you what exactly an audit is, why they occur, what policies they apply to, and then some different types of audits and some tips to make sure that you're not slapped with a big old surprise audit. Hey, welcome to the Business Insurance Playbook YouTube channel. My name's Mike Salas. I'm your host. I started this channel for one simple reason, that is to help business owners become better buyers of insurance and to understand the game better. Do me a big favor, if you like my content, give us a thumbs up and subscribe. What's an audit? At its most basic level, it's a way for the insurance company to true up and verify the exposure data that you provided in the beginning of the policy period. By exposure data, I mean either your sales or your payroll or maybe rental receipts. We'll get into all that later. But that is what your premium is based off of, right? They take a rate and they multiply it by your exposure data, and then you have your premium. So at the end of the policy period, what if you did more than you projected? Or what if you did less? That is where the audit comes in to true this up. So there's different policies that audits apply to. The ones that I see the most are your general liability insurance, right? This is going to typically be based off of either sales or payroll. There's also work comp audits, and this is always based off of payroll. There's also audits for your inland marine policy under your leased rented equipment. That's based off of your rental receipts. So if you're a construction company and you rent a ton of equipment, expect an audit and for them to ask, hey, what are your rental receipts this past year? And the other policy that I'll see audits apply to is auto policies. If you have a really large auto fleet, they're going to basically look at your vehicles if it's on a composite rated and say, hey, you started the year with 20, you ended the year with 40, we got to charge you for the difference. One I forgot to mention is also sometimes I will see umbrellas that are auditable, and those are typically going to be audited based on sales. Okay, so now you know the policies that are auditable. I want to talk next about the different kinds of audits and what to expect. So there's three different kinds. One is the standard, second is a one-way audit, and the third is non-auditable. So let's talk about a standard one. This is the one that is used commonly, and I'm just going to use your general liability policy for example. You think you're going to do $10 million in sales. The way the insurance company calculates your premium, they would take that $10,000, $10 million divided by 1,000 and multiply that by the rate. Your rate is always per 1,000 typically. It could be per 100 on work comp, but for general liability, per 1,000. You thought you were going to do 10, you end up doing 15. So now basically, let's just say you had a $5 rate and you did an extra $5,000 after it's divided by 1,000 or 5 million in sales. So you take 5,000 divided by 5, you would have an audit for $25,000 after that policy period's over. That's how it works. On the flip side, that's if you do more. Now, if you do exactly where you said, you'd owe nothing or get nothing back. If you do less, it works the same way, just inverse, right? You only did 5,000, you thought you were going to do 10,000, you should get $25,000 back. The next audit is a one-way audit. This is going to be very common if you buy insurance through an excess and surplus lines market, less regulated. And so the way that the audits work here is you have, let's say you think you're going to do 10 million and you do $8 million. You do less than what you forecast. Guess what? You don't get any money back. Now, here's the real part that stinks about it. Let's say you did 15 million and you forecasted 10, you still pay the additional for that additional 5 million in sales. So that's a one-way audit. If you do over, you pay more. If you do under, you get no money back. It's very important when you have a one-way audit that you are very conservative with the forecast figures you give your agent because you're not going to ever get that money back. The last one I want to talk is a non-auditable policy. The area I see this is if you are doing environmental work. A lot of environmental underwriters have non-auditable policies, at least here in the United States. So if you are a contractor, it might be better to be in non-auditable versus a construction, right? You could be the same carrier, but the different underwriters in different departments can look at it. And so that's where seeking your agent's advice on that can be really beneficial. So how do audits typically work? Well, usually one of two ways. One is could be self-reporting. The insurance company sends you a form electronically, you fill it out, and you send it back, and there's your audit. Second is they actually send an auditor out to your facility or jump on a phone call and ask for some documentation, and they actually audit it themselves or use a third party to audit you. In all situations, if you get an audit back and you just don't agree with it, the best thing to do is talk to your agent right away and say, I want to dispute this. And make sure that you ask for a copy of your audit and how they got to the numbers that they got to, and then go from there. The last thing I want to share with you is you should never be caught off guard with a big audit. You should always be aware of it, right? How? Well, you know what the number is that you forecasted in the beginning of the year. Let's say it was $10 million. What you should be doing is talking to your agent proactively throughout that year to make sure that the number that you gave the insurance company is still trending, right? And if it's not, talk to your agent, and they should be kind of bringing this to the forefront of your mind and saying, hey, Mr. Business Owner, you thought you're going to do 10, you're already at 10 6 months in. It looks like you're going to do 20. You should start accruing for an audit at the end of the year. Here's your rate. So start accruing now. So then you're not caught off guard and you also have the money stashed up to pay when the audit is due. There's no reason to be afraid of a large audit. Where most of the issues come down to is miscommunication. I hope this video helped you a little bit. If it did, subscribe to our channel or send me a message if you're having any audit frustrations. I'd be happy to chat with you.